Hello, and a massive hello to everybody. Hope everybody's having a great time. Hope everybody's having a great weekend wherever you may be, whatever you may be doing. Here we go. So 50 pips in the house, 26th of March, 2017. No trade calls, no recommendations. Everybody's responsible for their own stuff. We're here just for educational purpose only, just trying to share the outlook for the week as usual. Everybody, thank you so much for subscribing. Thank you so much for the likes and the retweets. Very much appreciated. Good to see people are finding it useful. So, what's happening again, we're going into the final week of the month, so it's going to be particularly interesting, at least we can hope, right? And basically, as we've been saying since the back end of February, we thought that, equities and we're trying to put in some kind of a top. And there are some very key inflection points across the board. And we don't usually talk about it so early, but, sometimes we are at key inflection points. We said we'd have to keep a very, very close eye on how March went. And that implies, how those monthly candles close. So what I want to do today, as always, you can go back on all the videos. We've discussed a bunch of stuff in detail, and you can always hit me up on the blog if you have a specific question. But I just want to do a quick outlook and go through the bigger picture and look at, equities, bonds, gold, crude, the dollar, and then do a little bonus, have a look at GBP USD on cable, right? So basically, we have some fairly decent data points throughout the week, nothing major, nothing compared to last week, but, the salient thing is to keep in mind that Article 50 gets triggered on Wednesday, so we'll have to see what happens there, and that's why we'll have a little detailed look at cable, right? So what's going on equities? Here we go. So our thesis is that we're putting in some kind of a bigger structural top. We're looking for a healthy correction. We feel that bigger picture, we've got some unresolved business, as crazy as it may be, unresolved business at the election low. Might not be for tomorrow, but we still feel there's some unresolved business there. And what we were looking for here was an initial pullback into the 50 DMA, right? Highlight on the chart. This is likely going to be pivotal for a move back into the 100, up or down, right? Just always bull bear lines. The market's going to do what the market needs to do. So here, looking at the shorter term action, what's going to be, I think what is clear to everybody is that it would be surprising that we don't have a bunch of stops layered below, right, this 50, whether it's just resting stops or people wanting to get out if we get a daily close below the 50 DMA. And if that gives, then we would expect that we'd see a quick move back all the way into to try and take out the 100, confluence with this previous resistance. Some people might call it the 2300, but it's a zone. It's this next area. Now, clearly here, even if we probe below, or if we can't take this out, which would seem to be the thing that will likely try and trigger early in the week, if we can, then it's time to bounce. What happens if we bounce? Well, if that holds, then there's a key distinct possibility that this is, that was it, buy the dip, and we're going all the way back to a new move higher. And what you want to look on any kind of bounce is this descending trend line still in play, right? So it's not that we're trying to we don't know what's going to happen, is that nobody knows what's going to happen. So the best we can do is highlight and plan on the chart and say, what are the key inflection points, and try and play out different scenarios and be prepared to take action. So our scenarios are basically, we'd expect the market, number one, to try and trigger these stops. If it can trigger those stops, we'd expect it to come right back down into these lower areas and try and make a good run for there. If it can't trigger the stops, or it triggers them but it can't get any traction to the downside, we'd expect a sharp move. A lot of people, intraday, the only thing you probably do there is try to buy for a pop, and your first point of resistance would be this descending trend line, and if that goes, then you're looking at the other level. Like, as always, it's like it's playing ping pong between support and resistance levels. So that's the way we'd be looking at it. And again, if you look at it on something like the way the monthly candle is shaping up, right, it's starting to look fairly pretty for the bears, right? So we'll have to see what happens, but that's the way we're looking at the ES. What's happening on the ZBs? Well, on the ZBs, we talked about the fact that we were looking for very classic action. We were looking for these lows to get taken out into the FOMC and then time for a little bounce. And we're looking for the option of something like, 4 to 10% move higher, right? So far, so good. Now what you see is happening, it's coming into this overhead supply zone. It's stuck between the 50 and the 100, and there's a decision it has to take a decision here, right? If you look at it on a weekly, it looks fairly bullish, and it looks like it probably has some unresolved business higher, right? If you look at it on the monthly, it's also not a pattern you think, oh my God, quick, let me short this aggressively, if you see what I mean. So right now we're sticking with the call that we think bonds have some more room to go to the upside. What does that some more room mean? Well, we think we've got at least we'd expect it to try and take out these highs, and if we can take that out, nothing's changed, the move back into the 160 zone. Okay, what's happening in terms of gold? Now, gold, it looks like it wants to take a little pause here. It's a little bit tricky. I mean, it's bouncing nicely and it's behaving nicely, but right here it's tricky because it's held these series of higher lows rather, but here this is not looking pretty for the bulls. Right? So if you look at it on a bigger time frame, if you look at it on a weekly or on a monthly, the picture is very different, right? Because it still looks like it's fairly bid on the weekly. If you look on the monthly, it still looks like it's trying to coil, right? So I think there's a lot of chop here. This is probably the least interesting one shorter term here for us. Especially if equities roll, you'd expect this to continue to go higher, but maybe the way this is trading, we need to see a little bit of a retracement before we move higher. But the way we like to look at the charts here, to us, lower high, higher lows, stuck between all these moving averages, we consider this a lot of chop inside range. So whatever happens inside this area doesn't mean an awful lot to us. We need to see day closes outside this area to change our outlook, or to say, okay, something different is shaping up. Okay, on crude, what's happening on crude? So sloppy attempt to base, right? It's not doing a very good job at it right here, but it is holding, right? So you have to be a little bit careful. If you look at it on the weekly, also the picture is very different. We talked about it, that it was trying to hold around this area, and you see it's a sloppy hold, but you could argue that it's clearly trying to hold here for the next move higher, right? I think it's as clear as mud, but I would much rather, even being a contrarian, I'd much rather look for opportunities to try and trade this to the upside than get aggressively short. Now, should we get, something very bearish in terms of news and we get a strong break here, then any rally is probably a sell for a correction lower. But the way this is trading, we'd probably, especially intraday, be much more interested to try and play this to the long side. What's happening on the dollar index? Again, behaving quite nicely. This is the weekly, actually. Let's get back on the daily. We were talking already at the beginning of the year that we thought, it was a sell into this, so 103, 102. Nice little action here, and now it's holding below the 100. So we're not going to change. We've been talking about these levels for a long time. As long as we're holding below the 100, we feel that the risk is for this to come right back down and clip this ascending trend line and the 200 day moving average. That's what it looks like. Now, it's very similar to equities, right? You'd expect to see a lot of stops just below here. You'd expect the market to want to clip them, and you'd expect it to want to accelerate into this support zone. If it doesn't, the market's telling you something, right? If it starts to break above and then it starts to stabilize above, intraday, probably your play is to the long side, not to the short side. So we'll have to see what it's doing, but here I think, especially if we break lower, I would not want to get aggressive trying to short into this area. I think this is an important structural support, this whole zone. We'll have to see how it plays here, but especially on a day close level, there'll probably be a lot of business to be done here. To the upside, you want to watch the 100. You know, and that dollar strength or dollar weakness is pretty much going to play on all the dollar pairs. And as usual, we've said, you know what the deal is with yen. If equities are heavy, and you know the way euro is trading, you know, equities down, euro up, the squeezy on euro. Now, the only thing that's could be is a little bit different, and we've been talking about this for a while. Let me just get rid of this. So just clear up the chart. We've been talking about this a while, that basically cable be trading a little bit different because of this whole Brexit. So what to do, what to do, what to do. Now, there are a lot of different ways to look at this, and without trying to talk about politics or whatever. Here, of course, they trigger the Article 50. It's going to be, a lot's going to depend on the kind of commentary, the kind of rhetoric that comes around when they trigger, you know, how it's perceived, how it's worded, etc., etc. But here, just to be very unbiased, right, what's happening? Well, we're kind of stuck, right? So there are three options, as always, right? A lot of people forget option number 3, but when they trigger, there's three things that can happen, right? Market can go up, market can go down, or market can go sideways and do nothing. A lot of people usually forget option 3, but you know, there's 3 things that can happen. Most likely you'll get a combination of those threes in an erratic format, but you know, let's talk through it. So here, if it goes sideways, who cares, right? So if it goes up or down hard, that's what we want to look at here, is what are the areas to focus on, right? I think on any kind of strong rally here, especially into these highs, when you're starting to get into the 127 and this 200 DMA that's protecting the downtrend, we look at it as the 128 as a day close. So, you know, this is a big structural level. So any rally that can't close, day close above the 128 into those levels, we consider that an interesting fade zone to the downside, right? And on any very aggressive news to the downside, any aggressive move back into this whole 121.50, which cannot get any kind of traction to the downside, so that means close below. In terms of the 128, close above means watch out, this could really squeeze hard. To the downside, day close below the 121.50 means watch out, this could really puke hard, right? So 128, day close, 21.50 day close. Those are the levels we're really looking at. So unless it closes outside, for us, this is a fade opportunity. This is a fade opportunity, right? Now, if we're outside of that zone, then it's like, we'd like to call it any new high possible, any new low possible, right? So what that means, above the 128, there's no reason why this can't continue to squeeze and make it all the way back down into this puke zone, back towards the 130s, right? And if this starts to get real traction below the 121.50, you know, there's no reason why this can't accelerate quick into the 116.50s. Now, to be clear, these are different options. We still feel that the risk is to the downside. We still feel that even if there's wheeling and dealing, ultimately this will resolve to the downside without having discussions about fair value, PPI, whatever you want to talk about. But we still think it needs to resolve to the downside. We still think there's some unresolved business here, even if ultimately we're going to move back higher. Okay, so I hope that was useful. Everybody have an awesome rest of the day. Thank you so much for the support. Again, if you have any charts you particularly want me to look at, and something which I feel may be interesting for the other guys, I'll always cover it in the weekly outlook. So just remember to send me an email through the blog on Friday or Saturday, just before I record these on Sundays. So I'll check the chart out, and if I think there's something interesting, either technically for learning purposes or because it's an interesting chart, I'll cover it with pleasure. Okay, have an awesome one. Thank you so much. Bye bye, guys.